Good afternoon, Scott Redler, T3 Live. Welcome to today's recap. So you're going to go home, you're going to go on all these media outlets, whether it's a newspaper, Wall Street Journal, you name it. They're going to have NASDAQ 5,000. And definitely a very different world from when we hit NASDAQ 5,000 back, back in the year 2000, or whenever that was. It's funny. I did two presentations the past 2 days for Charles Schwab, going over patterns and technicals and how you could have maneuvered it, how you could have different time frames. And as I look around the money show is probably 20% of what it used to be. The huge ballrooms with multiple vendors everywhere have turned into like 4 big ones with a few others like ourselves, and so much less traffic. And it's upsetting. It's upsetting to me that there is a lack of people involved in the market the way they were the first time we got there, the first time when there was a fever, the first time when people were leaving their jobs of being doctors and lawyers and whatever they were doing to try and hit it big in the market. But once that bubble burst and everyone got hurt because nobody knew what they were doing, a lot of them just said, I'm not ever doing that again. But meanwhile, they had no idea what they were doing. It's the traders like myself and the group here, as well as others that I've been coming across the past decade and on my Twitter feed, that have taught themselves how to just approach the market. And I don't exactly know why people haven't come back. I don't know if it's the fear-mongering by the media about every time we pull back 4.5%, everyone's like, we're going to pull back 10, 15, 20, or every time we hit new highs, there's every reason why we shouldn't be there. And maybe that's why the normal average person is not that involved. I don't know. I guess it's just not me to figure out. It's a little depressing because there has been a lot of money to be made in the market, and if you were a baby boomer like my parents and you started to do what you were supposed to do and put a certain amount of money every single month, you'd be sitting pretty. If you invested your first dollar before 1987, okay, and kept doing just say $200 a month from then on, and you were a baby boomer, you'd have a very nice retirement. That's a long-term plan. If you were my age, and you started investing in 1998, right before the tech bubble burst, and you did every single month thereafter because that's what you're told to do in college and whatnot, instead of listening to all of the new doomsday, naysay, whatever it is, and stayed the course, you have a great average course, a great average cost. My wife, she's 38. She started in 2006 with a 401k at her hospital. She lived through the financial crisis. She started doing it and didn't care that the S&P went down to 666, kept going, and you know what? We have a nice 401k combined that macro-wise is doing just fine. And granted, there are some times when, depending on your age, you don't want to just start a plan, but overall, percentage-wise, if you stay the course, it does cost average to do pretty well if you just continue to buy. And then if you actually put more in every time you get the headlines going berserk that we pulled in 5% or 10%, you do a little bit more, you'll do better than the indices. So that's long term. And I don't understand why there aren't more people in there long term and not as many people celebrating the new highs, but it is what it is. As far as what I do from an active trading perspective, as far as what most people who follow me here do to create a living in cash flow, 1 month ago we had the day to take notice, the outside day, the red dog reversal, the time that I don't care if you were bullish, bearish, you say the market just changed, let's figure out if there's commitment. And that's what I went over at the Schwab presentation today. If you look here at the SPX, that was right here. Okay, and I remember being short on this day, saying, wow, no one thinks Red Dog could be short. I'm going to show everybody I'm short here. I'm adding through here. We're going to at least test a 200-day. We might be the start of a bigger correction. And then this happened right there, that Red Dog reversal. That was me saying, wow, I better get out. I didn't get long like I normally do, okay, on the Red Dog reversal and take longs overnight for follow through. I just got out of my shorts and said, you know what, I'm wrong, let me reevaluate, and thank goodness, because look what happened here. So instead of fighting it and hating the world and being short into this area and rant and rave on how the market is centrally planned and how it can't go higher and there's no low volume and this and that, I said, I'm out of the way, I'm done with it. So on this day, okay, back into the uptrend or downtrend, I went home and I was thinking to myself, what am I doing here? I was like self-hating. I don't know if any of you have self-hated before, when you have an idea and it goes and you're not in it, or you have an idea and you sell too early and how could I have done that? You have a great idea that you took not enough shares and and you're like, yeah, it's a missed opportunity. Traders self-hate a lot. And you can't do that for too long, because if you self-hate, you start to revenge the trade. If you start to revenge the trade, you start losing money and you start breaking your process. You start doing all that, you get out of business. So right here, you go back to the chart. Typically, I catch this 2-day move. Okay, that's a great day-and-a-half trade, something that pays my bills usually most of the time. You know, and here I said, you know what, I'm not involved. Okay, I'm not going to just short things. Let's see how we can handle 2060 and then figure out if there's more opportunity. So we pushed through right here, and then I wanted to see, can we hold 2040, and we held right there and turned up. So right in here is when I got long. Right in here is when I got portfolio approach, and I said, you know what, I don't care that I missed these 2 days. I'm not going to fight it short. I don't care that I didn't do what I usually do, but at least I'm not sitting here, you know, rolling it up and hating the world. I'm going to get long in here, find some stocks, whether it was Twitter, whether it was Facebook, whether it was Apple, whether it was some banks, whatever it was. I think once we break above this time, we're going to make new highs, and lo and behold, this is where we are. And we've been following the 8-day, and the 8-day has been a nice roadmap. It looked as if maybe today we could break below it, and you know what? It didn't. The low was 2103. Today's low was 2104, one handle, and we turned up. And now we'll see if we break above the highs here. And that right there is an accelerated trend, and you stay with it until it changes. You don't have to have as much as you had when we were breaking 2064, but you don't want to be fighting it. And the Qs also had a powerful day. You know, broke above this range. It did seem as if potentially we could break below you know, the 8-day, but did we break below the 8-day? No. Have we been trending since we broke the downtrend here and showed commitment to this red dog reversal there? Yes. So here we are, methodical. Day one. This is only a day one out. Yeah, if we get a matching day down, would that be bearish? Yeah, but we haven't been trapped like that in a while, and we're not extended, and it could probably continue. The Russell also had a pretty powerful day. It also, has it been following the 8-day since breaking above the old highs here? Have you had a nice trade from the red dog reversal here, or maybe even here? Yes. So there's a lot of people ranting about the Russell, which I don't know why they do that and how it benefits them. But anyway, it's been trending nicely. And if you started shorting here or here, chances are when a FI does pull in, you're going to be out of money unless you're just using ink versus real money. Anyway, you know, so today was one of those days where I'm like, do we hold the 8-day or not? And we held it in the first 15 minutes, and then we trended the rest of the day. As far as individual names, a lot of the mega cap techs had a good day. Cisco, which is my mega cap pick of the year, okay, had a really nice breakout day. Here is your gap after earnings. This was your breakout. Day one after the 8-day caught up. We'll see how much more that goes. Intel turned up for the first time in a while. Broken, but strong day. You'll see if that continues. Not broken, just not a lot of momentum ever since this gap down. We'll see if it gets in there. Microsoft, I think, is already in that gap, or looks to be like it could get in that gap for a trade. So there was some strength in here. Some of the high beta names, you know, there was a nice little reversal in Netflix today, a little red dog reversal. It was down $3, and then traded through this pivot, the pivot that I had in my morning note. I wrote down a lot of pivots. This one actually went below 474 and went back above and closed well. Nice little tactical trade. It also held the 8-day. Amazon also held the 8-day. So if you're just shorting these things, you know, I don't understand what you're really doing. But anyway, above the 8-day or riding it, you try and ride it. I'm not involved in either Netflix or Amazon, but a lot of people are making their money there. This still looks good. Apple, you know, bit of an inside day. Not sure exactly what it wants to do, but it's holding in there. You know, this was your gap after earnings. Here was your ad on the breakout. You know, small little break right there. Red dog reversal was good last week. So far, not enough power to break above this inside range. We'll see what's next. It was upgraded today. Definitely lagged today, but it's still just consolidating after a big move, after another big move from here. And this has been a really good vehicle for a lot of us. We'll see what's next. At least we have some levels here to see if it wants to maybe break this pennant and test the 21-day, or hold in here and then break above 131. We'll stay tuned there. Some of the social media stocks repaired pretty quickly, which is what I said in the morning call. I'm like, do we break below and fall apart, or can they repair quickly so then maybe momentum comes back? LinkedIn, you know, I know it's not a blockbuster right now, but it could have fallen apart, and it didn't. You know, it's still above this area. Yes, it tried to break out and failed here, which was, you know, you try it and then you sell it. Today it's back in here. We'll see if momentum comes back. Facebook that gave us a lot of nice trades last week. Also, kind of bounced back in a way that is rebuilding. Here was your breakout trade. Here was a nice add, and then if you had any left over, you probably got stopped out like I did today. Went back in it. A little bit of a red dog reversal today. Went below 78.62 by what, 10 cents. So when it came back above, that could have been your buy, and you would have made $1 or so. And then been able to see what's next. I'd love to see at some point this new flag up here above the 8-day breakout. Twitter, was weaker in the morning and then kind of came back. I think this just needs more time. Not great. Broke this little trend line. It's below the 8-day. It's had a big move, guys. Since the start of the year. My mouse is a little bit. Let me just get off of this. My mouse is a little mousy. Ever since this break here, you think about it was 38 to start the year. Big gap up after earnings. Not much traction since, but decent. You go look elsewhere. Google's just been out of control. I miss this, and I'm not going to short it because I missed it, but I'm not going to chase it either. We had a nice little trade here. I was thinking about this whole resistance. I was hoping it would happen here. It didn't happen here. Pulled back, got some guys out, and then boom, straight up. So hopefully you're not just have short in the brain here. But it's also hard to chase, but it's back in the game, and it's definitely something that you could trade every day, and if you want to maneuver actively, go on a 3 and 5 minute chart. You would think that it would have some resistance into here. It just kind of filled this little air pocket for a stop here, and now it's on its way there. And you'll see what's next here. It's acting very well. I made this versus making that, but it is what it is. Some guys are still with it. Let's see, Baidu has been kind of out of play and weaker. Not much to say here. I guess maybe at some point, if heavy volume came in, maybe it broke above this, it would act better, but it's below the moving averages, means it's a lack of momentum versus good. BABA also below all the moving averages, and avoid. This is what happens, guys. When new issues come public, they come public and they have tons of opportunity. And this had tons of opportunity to start. This is when it broke above that 92 and gave you a fast move to the old IPO high, then gave you another fast move before the red dog reversal here. So this was from 92 to 120, and then this was a potential change. Then it broke the 8-day, lost momentum, came back up, broke it again, and this is probably when a lot of us started to trading it less. Started to think about when could it possibly break this downtrend and get back on track. So I remember my last real play here was this. Okay, here's your descending channel. Looks like it might break above. Be long some. If it gets back below 103, get out of the way. And then it broke. Boom, boom, right before earnings. Thank goodness, got me out. And then I haven't really traded it much since. And here you are, still descending, still out of play. Nothing worth. There are ranters out there saying, oh, look at BABA. Where are the momentum Mobros? Where's this? Where's that? Yeah, this is where we were. Not in here when the trade changes. Same way with G-Pro. We were very involved during this momentum move because it was fast and furious and it traded well technically. Right here was your spot. Okay, and then it followed the 8-day with a nice trade here, another nice consolidation here, and then you had your topping tail there, and then it broke the 8-day for the first time with authority there, and that's when the trade changed. So from July all the way through October, that was the run. Then the question was, would it take time to reevaluate and figure out whether it can go again? Here's a bigger wedge. Then it broke below this 75-ish and became a no trade or a very specific 3 to 5 minute trade versus a daily chart trade. And now here you are all the way down here. And no one's really playing it. It's below the 21-day. It's in a downtrend now. Not an uptrend when we liked it. This is when we're done with it. So we stay with momentum until momentum changes. And that's above the 8 and 21-day in these key stocks. And right now, you don't hear us mentioning it really because it's not worth mentioning until something potentially changes big time, which it hasn't happened. As far as the TLTs, we talked about 128, what's it called, as a potential pivot to see if there's any kind of commitment to the recent move. Here's when the accelerated trend broke. Right here, you could have gotten out of the way. Even this, the TLT trade that all the macro guys think they're so smart with and no one else is allowed to talk about. Well, if they would have paid attention right here when it broke 135.96, that could have been your out. If that was your out, you could have said, okay, I'm going to be flexible now. Then you had this trade here where it held the intermediate trend. Remember that day? We're like, okay, we'll open lower. If we could trade above 128, perhaps it could see this spot for a trade, not knowing if it would be more than that. Got there, and then right here, wasn't sure if this would hold. There was some articles this weekend about the Fed governors saying that everyone's not hawkish enough, so this was your spot. If you were still in it from here and you had a portion left over, once it broke 128.30-ish, could have been your pivot, and that's where you should have got out. If you want to just stay in it and you stayed in it during this point, you're staying it in here and you're buying more, good luck. Okay, you'll see what happens next. If you're trading it, hopefully you had some left over and that was your out right there. As far as some banks, Goldman Sachs, real strong. Looks like it's still been best in breed. At some point, maybe it gets above this. Not leading, but not a headwind right now. Citigroup had a big move. Look at that. Already at new highs of the past month. Some reason Morgan's lagging. I don't know why I bought it again. I bought it today, and we'll see what happens. Bank of America is still lagging. JP Morgan is much better. You look at that. It's breaking up. Same way Citigroup is. So that's been acting better. Goldman, JP Morgan, and Citi have been acting best for the banks. I'm sure Wells Fargo is even better, but I don't really watch that as much. Yeah, that's actually back near highs already. So I just went over banks that are acting well. You had mega caps that are acting fine. You have high beta names to go to. You have some solars, FSLR back on the plan since that gap up and still trending. Look at that nice gap up. Remember we had the options here, and since then it's still trending in the game. Talked about SPWR in the note today saying maybe it starts to get going, and it held the gap, and here's a nice setup. Some people got long as it cleared this. Looks like there is some room there too. So the solar names are kind of in there. Oil, still not much traction, hanging out in here. Tried to go, couldn't really go. What the XLEs do today? A little bottom tail off the 50-day, not much to write home about. And here we are. It's Monday, it's a new month. Seems like the 8-day held again. People I feel like might be forced to stay in this rally because no one wants to underperform it again like they've done the past few years, waiting and waiting. So, could speed up a little bit. We'll see. I wouldn't chase things, but again, I wouldn't just have short on the brain. I'd keep maneuvering through patterns, try and keep some longs on as long as we're trending, and find those tight patterns that do expand because there have been a few of them. And then also like today in Amazon and Netflix, you had some red dog reversals to get back involved. And Facebook, even after the pullback, there was a calculated point to get back involved. Not everything's created equal, but nothing ever is. And if you're watching this and you don't have any clue or involvement in the market, at least you're watching this, and hopefully maybe you take some of the education courses and you figure out how you can get involved, because the market's going to be here with or without us. Better with you than without you. Even if we do correct again, woo, there'll be a way to figure out how deep, how far, and then whether there's a reversal to put out and allocate more money. Remember, if we're going to have a 25% correction in this market, or 20%, or 30%, or 15%, that means we have to break the 8 and 21 day first, break the 50, break the 100, break the 200, stay below the 200 for 3 or 4 sessions, and then continue lower. We haven't even broke the 8 and 21 day. So don't let the obsessors obsess. And hopefully you're involved. Have a great night. See you tomorrow.